The Bank of Canada this time did not stick to 0.25% rate cut. Instead, they went for 0.5%.
With a supersized rate cut, this is 50 basis points.
The policy rate now down to 3.75%.
There was a clear consensus that it was appropriate to take a larger step today.
What does this mean for you, the economy, and where are we heading next? Stay tuned as I break it all for you. Hey everyone, this is Harji Sidhu, and today in this video I'm going to talk about what's affecting everyone. Bank of Canada's rate cut. Let's start with the basics. The Bank of Canada has brought its interest rate down by 0.5%, bringing it down to 3.75%. This is a significant move since these small changes in interest rates can have big impacts on our lives, like our car payments, our mortgage payments, etc. So why this big cut? This is to primarily tackle inflation. Over the past 2 years, the bank raised the interest rates aggressively to tackle inflation. Now that the inflation has eased up, now they have decided to take it easy. And they're aiming to keep it balanced to prevent the economy from cooling off too much. Just last year, when the inflation was way over Bank of Canada's 2% target, they increased the interest rate to cool things off. Fast forward to now, the inflation has dropped to 1.6%, below to what they consider as healthy. While lower inflation sounds like good news, but there is a risk of deflation. At first, deflation seems like a good thing, right? But if people expect prices to drop, they hold off on spending, and that is when things get tricky. Imagine you're wanting to buy a TV, but you hear the prices are going to drop. So what do? You are going to hold off on your TV purchase. Imagine if everyone starts to do the same. The businesses would start seeing fewer sales and eventually needing job cuts. This leads to a slower economy and lower wages overall. And this is why inflation a little bit is always more preferable, because it keeps the money circulating inside the economy. And this is where the Bank of Canada wants to encourage people to spend money. So how does this interest rate cut affect you, especially if you have a mortgage? If you are a variable rate mortgage holder, this is going to decrease your payments. For example, if your mortgage is about $300,000, this is going to effectively reduce your mortgage payments by $100 a month, which adds up to $1,200 a year, which you can maybe use for vacation, house renovation, or any other expense that you might have planned. It's just not the mortgages either. If you have a line of credit or home equity loan, the payments of that are also going to decrease. But don't expect to see immediate changes in other things like grocery. These things are going to take some time. Now, for those who are thinking to buy a house, the interest rate cut might make things easier for you. Lower borrowing cost can help first-time home buyers get into the market, which is a good thing. However, we are not expecting massive rise in prices like we did in 2021. Houses in Greater Vancouver area or Greater Toronto area are already high and they're unlikely to skyrocket again. But we might see more activity in the market as more buyers would try to leverage lower interest rates, especially younger people trying to get their first home. It's an exciting time to buy, but always remember to keep your finances in check. So, to wrap it all up, the Bank of Canada's interest rate cut is a significant move for existing house owners and potential new house owners. It is a step towards preventing deflation, stimulating the economy, and making borrowing a bit easier for Canadians. If you're in the market for buying, this might be a good time to start looking and take advantage of these lower rates. Thanks for watching this video. If you find this helpful, please drop a comment down below. What do you guys think how the Bank of Canada will do in the next sitting? See you in the next video.